It's Monday, October 26th, and we're 3 hours into trading. Hello, traders. Let's take a look at what the market's doing today. We've got some weakness, although that's not unexpected. You know, for the last week, I've been telling you I did not like the price action a week ago, Monday. It was a warning sign. We've seen some follow through selling, so let's get our broader based perspective on what the market's doing. We'll go into the daily chart on the SPY. We'll put up the major moving averages to see where they come into play. 200-day, 100-day, and 50-day moving average. You can see how today we are through that critical 50-day moving average on a long red candle right now on its low. The 100-day moving average looks like it is in play before the election. Now here's the tell that I saw last week. We had the market running up. This is all good. We had this downward sloping trend line that was broken to the upside. That was nice. We had an inverted head and shoulders formation right here. That was nice. We broke above the neckline. That was good. And we had 3 very strong gapping days. These are true gaps, meaning that when the market gaps higher, the low from that day is higher than the high from the previous day. That's a powerful pattern. We didn't have one, we had 3 of them in a row. But then as soon as the selling pressure came in, I thought, well, this might just be taking out some of the fluff here, and we could have a little bit of a bullish flag here. Down, down, down. We recheck the bid and then zoom off to the races, possibly test that high before the election. That was one scenario that could have played out. However, I saw this weakness here on Friday with the market closing on its low. In and of itself, not too damaging, not too concerning. But this long red bar right here with the market closing on its low and almost challenging that 50-day moving average, when I saw this price action a week ago Monday, I knew we were in trouble because instead of being a bull flag formation, now the whole character of the market changes, and these key bars are critical to identify when you're trading. So what did it tell me? Excuse me, I've got a alert right there. We're going to bring that down. This formation now has turned into a double top lower high with additional selling coming into play. So right in here last week, Tuesday, we were exiting all of our bullish put spreads and Wednesday. Fortunately, because time decay had worked in our favor, we were able to buy them back at a break even, or in many cases, even make a little bit of money on that spread. Now, we do still have one open position on our bullish put spreads. It's kind of waffling around our short strike price, but I do like the stock. I think it's found support and I think it will perform well. We could take a quick look at that during the course of this video. Right now, this is a major breakdown right here through horizontal support. 1, 2 tests right above that 50-day moving average. Now we're below it. If we close below the 50-day moving average, then we are likely to test that 100-day moving average. So what's changed? What got everyone all excited? From my own perspective, I believe it's the fact that there's no stimulus bill. As long as there was the potential for a stimulus bill before the election, that was keeping buyers engaged because that type of news would spark a big rally. It also kept short sellers from getting overly aggressive into the election. As soon as that possibility for the stimulus bill was removed from the market, there was natural selling. I believe that asset managers are starting to sell some of their portfolios to simply reduce risk. And once that stimulus bill was off the table, now we're going to have not a press conference, but Nancy Pelosi and Steve Mnuchin are both going to be speaking today at 2 o'clock Eastern Time. They'll probably give us an update of the status of it. If I take a look at everything else that's going on right now, you've got 57 million Americans have already voted, so a lot of the vote is already in. I don't think either party is particularly worried about looking good or bad ahead of the election right now, unfortunately. The other thing that's in play is that we are going to have a new Supreme Court Justice. Amy Coney Barrett should be confirmed today, and that is not going to sit well with Democrats. They are not going to be in a negotiating mood. They are going to wait until the election, and then they will decide what to do with the stimulus bill. Both parties want the stimulus bill. Very important to remember. So once the election results are known, we can expect a stimulus bill. It may take 2 or 3 weeks to get that approved and get it through the process, but it's not going to take a few months. We can expect that this is going to hit the market. Both parties want it. So a little bit different from one party to the other as far as what they plan on doing. 1.9 trillion for the Republicans, 2.5 trillion for the Democrats. So the size and the context of it will be a little bit different. But the good news for the market is that there's going to be a flood of cash coming into the market again, and the market is addicted to easy money. I read a statistic over the weekend that I believe it's 87% of the time the market has rallied after the election, and the average gains have been 6%. That's a pretty powerful statistic. However, one of those times when it did not work was in the year 2000, when Bush and Gore had a locked election where they were trying to sift through all the results, the hanging chads in Florida. The market did not like that uncertainty. And with the number of mail in ballots this year, and with each state handling those mail in ballots differently, I think that the market could get very, very nervous for those 2 or 3 weeks, and we could see civil unrest, unfortunately. I hope I'm wrong about this, but my suspicion is we're going to see it. The market's telling us right now that it doesn't like the backdrop. PE ratios are at 23. That's relatively rich. So there's room for downside right now. And profits for Q3 are expected to decline 20% year over year for the S&P 500. So the second wave of coronavirus is weighing on economic activity, it's weighing on profitability. We have a resurgence of coronavirus across the country. We also have seen that in Europe. It's going to be a problem. Well, the good news is we've got some vaccines. AstraZeneca plans to mass distribute their vaccine. They're thinking around Christmas time. Plus, there have been a lot of advancements in the treatment itself. So, that's where we stand with the market. Now, I haven't been doing a lot of videos recently because I don't have a lot of swing trades to show you. In fact, I don't have any swing trades to show you. If you're a swing trader, you should be in cash right now. You should not have any positions on. We don't know what the market's going to do. This is a binary event that's coming up. So the trades that I show you are simply going to be some day trades that we're currently looking at. I will take a look at the market right now, and I will tell you what I think the price action is going to do today. You can already tell that as long as we're below that 50-day moving average, I believe the price action is going to be very, very soft. I just mentioned to everyone in the chat room, if you're looking to play a bounce, you have to be very, very cautious. The market has not been able to get off the deck. You can see how sellers are keeping a lid on any bounce. That is bearish. And so we spent this time compressing, and then whoosh, there came the next down leg. And you can see how that coincided with this bearish 1OP cross and that compression. You can also see the beautiful bearish 1OP cross right here early in the day. That was classic. As soon as that low was taken out, the low of the day, see you later. Market down. Now we had a bullish cross right in here. However, after huge downward momentum like that, when we have a bearish trend day, we know that there are bearish divergences, and that's exactly what this was. So indicator up, up, up. Normally the market would be going up, and when it's not, then you know this is a bearish divergence and that next cross is going to be a really good one. So I believe we're going to continue to drift lower. This is a bear trend day. I don't believe that we're going to see any meaningful bounce until the last hour, maybe even the last half hour of trading, and it will be only that. It will just be a little bounce. Obviously, you need to be watching the news wires around 2 o'clock Eastern time to see what Steve Mnuchin and Nancy Pelosi are saying. I think it's going to be bearish, meaning they weren't able to reach an agreement. Now, the other reason that this timeline was so important for the stimulus bill is that politicians have to go back to their home states. They want to go back to vote, but in many cases, they're also needing to campaign so that they can get reelected. So you're not going to have the numbers that they need to get these bills passed. That's how the market's setting up currently. Let's see if we can find a bearish trade or two. And I'm going to go into Pop Bear. We'll take a look there, see what we've got working. I'm going to go into the daily chart because I want to make sure that before I short anything on a day trading basis, I've got a nice longer term perspective telling me that this is a good viable short. You can see Cisco here is through the horizontal support level right there, long red candle on its low. Cisco doesn't move much. It's a stock that just trickles lower, makes very gradual moves. Cisco looks like a pretty good short to me. V, that's Visa. That's some pretty bearish price action. You can see how the market was compressing, the stock was compressing. But before we had this long bar right here, we're already starting to see that bar in Visa. So it was selling off. Without a stimulus bill, people aren't going to be charging as much. It's going to perhaps reduce holiday shopping. So Visa is selling off on that news. Let's take a look at the daily chart. And I want to see breakdowns through major technical support. You cannot short this stock until it gets below the 200-day moving average, which is at 190.124, and it needs to stay below that level. You can see we're close, but I would not short this until we're through that technical support. Once those buyers are gone, I think the stock has a clear path lower. We're on a 5-minute chart on the SPY. I like to have this chart running behind my other charts so that I can always see what the market's doing, and you'll be able to see it continue to drift lower. This is a long red candle closing on its low. I would not even contemplate playing any bounces or getting long until half of this long red candle has been erased. And then if you're super early and you're super aggressive, you can buy here and stop out here. I wouldn't even try that though. I would need to see the market close above the open from this long red candle, and that puts you right around the 338.80 level. So until then, I think you've got to really favor the short side. So let's keep looking, see what else we've got. I like those two stocks. I think Cisco, I think Visa, those both work well. Let's take a look at week after earnings. These stocks are all down after a weak earnings reaction. And let's take a look at TSM. You can see how it's rolling over, almost a failed breakout here. It would need to get below this point right here for me to be interested. So that's not a particularly great play. IBM, really weak after the number, through all major horizontal support levels. That's a decent short. Netflix had a very negative earnings reaction. You can see how it is below the 100-day moving average right now. That's a stock that you can short. Intel got pummeled. Very, very weak today. Down $1.94 through this horizontal support level. You can see that drop right there. Yes, I think all of these could work. And there are your candidates for heavy selling. You can see that Microsoft is on the list. Very unusual given that Microsoft has a tendency to rally into the number. It posts earnings on the 27th, so this week. We've got major tech companies announcing earnings this week. They typically keep a bid to the market because they've performed so well that short sellers are very passive before mega cap tech earnings. Well, that bid has not been strong enough to keep the market afloat. So when you combine the possibility for a stimulus bill along with the tendency for the market to rally into mega cap tech earnings, those two positive influences have been overshadowed by profit taking and risk reduction by asset managers. So the market certainly looks like it's going to test the downside here. That's where I believe you need to position yourself on a day trading basis. I am not overly pessimistic long term, The only thing that would keep me on the sidelines after the election is if the results are not known. So if it's a super, super tight race that's going to come down to a few states, and those states have lots of mail-in ballots that they still need to count, and this drags on for 2, 3, 4 weeks, then I would not be in the market. I don't think the market's going to like that type of uncertainty. If it's a pretty overwhelming victory, one way or the other, then I think that a buying opportunity will be set up after the election. So we need to let that dust settle. A stimulus bill is coming. A vaccine is coming. Okay, it may be a month, could be 2 months, could be 3 months, but there is light at the end of the tunnel. And I think that needs to be the focus. And I believe that the smart money will recognize that and they will put money back to the work that's been on the sidelines right now. It's going to the sidelines. I believe it will come back in and be redeployed once the dust starts to settle. So that's the lead that we need to follow. Follow the big money. Price and volume tell us everything that we need to know. These are some stocks that you'll want to possibly short on an intraday basis. Try not to carry many overnight positions. Just go day to day with your trades. My videos, I'll probably do one every other day. I know that many of you are swing traders. You're looking for longer term trades. I don't have any for you. I'm not swing trading right now. So for you day traders that are out there, I will be posting videos every other day or so. And as conditions change, I'll make sure to update you. If you like the content, please give it a thumbs up and make sure to sign up for my YouTube channel and turn on your notifications so that you never miss these videos. Good luck with your trading. We'll see you soon. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.